How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel, as many of you know, dedicated to investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. Now, it has been one heck of a year, and literally, I mean, it has been an entire year since the inception of the Blue Lion Finance channel. Now, for all of you who have subscribed along the way, thank you from the bottom of my heart. We started from zero.
Started from the bottom, now we're here. Started from the bottom, now my old
And well, now we're here and we're sitting above 1,200 subscribers. I only plan to continue to allow this channel to grow as we go. Most importantly, if you're there just liking these videos along the way and you're personally learning, that's what matters to me most. Now, for the last video of 2021, I wanted to close this out with a very special video, of course, delivering through on the last account update of the year, with my account being up by $881.19, bringing my account to another record high here before the closeout of the year, sitting at $86,156.35. Now, in terms of today's video, I wanted to get right to it and talking about this macro level overview, what we could expect heading into the new year, at least in my opinion, before moving to the three stocks I've been doubling down on. Last but not least, wrap us up with a very special message for all of you. Now, before we dive in, tap on that thumbs up button and help me grow this channel. And as always, if you haven't done so by this point, tap on that subscribe button. I'd certainly love to have you along this journey with me in 2022. Now, YouTube, let's go ahead and dive right in. Without further ado, let's get right into it in today's video and talking about this macro level overview of what's happening in the market. I say it all the time, in that understanding, at least at a macro level, what exactly is happening, we're all going to be able to make better, wiser investment decisions for our own personal portfolios. That's what is key for a true investor. Now, just looking at the bigger picture right now, yes, we are in the midst of a Santa Claus rally, and yes, it is very exciting. However, I do foresee this rally coming to its end the moment we actually wake up and get with reality, in that COVID cases are still on the rise. Omicron is, of course, taking its toll on a global scale. And then inflation is, well, inflation, and it has not gone anywhere. It is still sky high. Of course, moving into January, we're going to get those Fed rate hikes as well. So I do believe that this rally will certainly wind down. That is going to be the opportune time for the long-term value investor like myself, and for any of you who are out there, to actually jump into the market and buy stocks while they're on sale. That is exactly what I've been doing all of 2021 and exactly what I'm going to continue to do well into 2022. So just be on your toes, because this market rally is exciting, but it certainly will come to its end. Now, this all leads me to the very first stock that I've doubled down on this past week. That company is Medtronic, ticker symbol MEDT. Medtronic is a global leader when it comes to medical technology and medical devices. I have been harping on this company for the last few weeks because it is just a powerhouse play of not only a dividend investment, but a world-class leader when it comes to the healthcare industry and revolutionizing the entire industry in and of itself. Now, when it comes to Medtronic's performance over the last handful of months, we can see that it's actually brutally beaten down, falling from around $135 a share down to where it sits today at around $104 per share. That is about a 22% sale opportunity for us to get invested into Medtronic, picking up these shares while they were so beaten down. Ultimately, I believe that the reason Medtronic is beaten down are reasons that are far overblown just because of fear. But honestly, with a company like Medtronic that has just been doing what it's doing since 1949, there is no reason this stock should be this low at this point in time. Taking a look at some of the reasons as to why it may be beaten down, well, they missed on their earnings report. One of their medical devices needed more time in clinical trials. That certainly scared away investors. Then, of course, with COVID cases spiking as well in a company manufacturing medical devices, those elective surgeries being pushed off further reduced Medtronic's sales. And we also have that supply chain disruption matter, which is putting heavy pricing pressure on a company like Medtronic. And last but not least here, the icing on the cake, or rather the salt on the wound, the nail in the coffin for Medtronic, is when the FDA came out and announced a warning that is going to be put out on potential recalls on one of Medtronic's devices coming out of their diabetes manufacturing facilities. Now, ultimately, I do believe that the market is just overreacting to all of this bad news, and for a company like Medtronic that's not going to be disappearing anytime soon, delivering a ton of value to the industry, I personally went ahead to pick up 3 more shares of Medtronic for an average cost of $104.23 each, bringing my total share count of Medtronic to 20 shares worth of this company that I'm only going to continue to double down on well into 2022 and beyond. Analysts also have expectations that Medtronic is just going to continue to soar, coming in at a median stock share price of $138 per share, a high stock share price of $153 per share, and best yet is that dividend of Medtronic's. They've been paying them out for 44 consecutive years, increasing them year over year, so a lot of confidence as a dividend investor. With their current dividend yield coming in at 2.41%, I'm certainly a happy investor when it comes to Medtronic. Next up, we have the world's most valuable company. That company is Apple, ticker symbol AAPL. Now, Apple does not need any sort of introduction whatsoever, and I actually just posted a video with Apple included within it. I'm going to post that tag above, but please feel free to check out the 5 dividend stocks that have just performed exceptionally well within my portfolio throughout 2021, and of course I believe are poised to grow well beyond 2022 as well. Now, most importantly when it comes to Apple is just understanding they're on the cusp of hitting that $3 trillion market capitalization mark, which is huge. I believe once they do that, there's going to be a ton of firepower left for that stock share price of theirs to continue to grow. Looking ahead into Apple's future, Apple devices continue to do exceptionally well as they hit the market. Now, of course, Apple has experienced supply chain disruption issues throughout 2020 and 2021. However, with that demand remaining high, my confidence remains just as high. Now, looking even further into Apple's future, we have 2 devices that I'm just incredibly excited about, one of which is a virtual reality headset that is due to roll out at the end of 2022. I believe that is going to be massive for the market to actually get their hands on it, and of course, Apple's stock share price should experience some momentum with that device rolling out. And then into 2025, we have to look ahead to Apple's car that is due to literally roll out and hit the streets. I believe it's going to be a very competitive EV when it comes to facing off against Tesla. And most importantly now, when it comes to analyst expectations, is that they have raised their expectations on Apple, coming in at a median expectation of $175 per share. And get this, a high stock share price that has finally surpassed $200 per share, coming in at $210 per share. Now, in the meantime, we just get to kick back and collect on Apple's dividend, with their dividend yield coming in at 0.49%. Now, I always say it's not the biggest dividend yield in the world, but nonetheless, a dividend that we get to collect on while just reaping the benefits of being invested in the world's most valuable company. So last week, I went ahead to pick up 1 more share of Apple for $178.99, bringing my total share count of Apple to 87 shares. I'm looking to get that up to 100 shares worth of the world's most valuable company. Now, as for the third investment I've doubled down on this past week, it is a REIT, a real estate investment trust. It is one that I have a ton of confidence in moving well into the future. This company is Stag Industrial, ticker symbol STAG. Now, Stag Industrial was founded back in 2010, so quite a younger REIT, not as established as some of the others that are out there, but certainly a powerhouse play. Now, Stag Industrial is myopically focused on the acquisitions and operations of single-tenant industrial facilities such as warehouses and distribution centers. So now I want to just get into their tenant list, because we're talking about tenants from Amazon, FedEx, GXO Logistics. These companies are currently booming, and with 40% of Stag Industrial's portfolio dealing in e-commerce fulfillment, we're talking about an industry that is booming. So therefore, a company that is really only just revving up their rev engine well into the future, at least in my opinion. Now, I went ahead to pick up 3 more shares of Stag Industrial for $47.27, bringing my grand total spent on Stag Industrial to $141.81, and ultimately my share count of Stag Industrial to 10 total shares worth of this REIT. I'm just going to continue to double down on Stag Industrial because these analyst expectations are only expecting Stag to grow. We can see they're coming in at a median stock share price of $47.50, a high stock share price at $54 per share, and best yet is Stag Industrial's dividend with a current dividend yield of 3.07%, which is right in the sweet spot of a dividend investment that I'd like to include within my portfolio. Now, YouTube, that is it between Medtronic, Apple, and Stag Industrial, the 3 investments that I've been doubling down on this past week, gearing up for 2022. And now, most importantly, that personal message I want to extend to you all. It's a little something I like to call the wealth of experience, which is far better than any amount of money that I can have in the bank. And here we go. In the beginning of 2021, I ended up quitting my job.
Well, don't worry. I'm not gonna do what you all think I'm gonna do, which is just flip out.
Taking a chance, moving over to Israel. Had a sudden change of plans while I was there. Spent the time with my nephew, sister, and brother-in-law. Amazing experience. But then I moved back to Manhattan, taking a shot at love.
What?
What an idiot. Oh.
Became a bachelor instead, ended up growing out the beard, flew over to St. Martin, came back, got a promotion, and then went over to Sedona, Arizona for a much needed sojourn. Now here I am right now making this last video of 2021, sharing with you that you can have all the money in the bank, but without actually prioritizing yourself and enjoying the money that you're earning, well, it's really not worth a whole lot. So definitely move into the new year with some financial plans of your own, some financial goals, but keep in mind, it's that wealth of experience that allows you to live a beautiful, full life. And that is what I want to leave you with heading into the new year, closing out 2021. Now, if you liked what you heard, you learned something new, drop those comments below. I'd certainly love to read through them, what your goals are for the upcoming year, your own personal wealth of experience throughout 2021, and what you think about those investments. Now, tap on that thumbs up button and help me grow this channel. And if you haven't done so by this point in time, tap on that subscribe button while you're at it. I'd certainly want you on this journey with me into 2022. Now, YouTube, Happy New Year, and I will see you all in the next video.